Hello and good evening, traders. Friday evening, 19th of September, 9:18 p.m. And I just thought that let's quickly cover my end of the week analysis before I hit the weekend. I've got a one hell of a busy weekend in front of me. So straight away, let's get going and let's try and understand what happened to the market and the sectors this week and how we should, strategize for the week ahead. I have my usual three time frame: the monthly, the weekly, and the daily. The next price indicator, state of flow, and the next RSI indicator. These tools help me tremendously to figure out what's happening with the chart. By the way, if you like my work, do share your thoughts and comments. And if you want, you can subscribe as well. I've been getting questions that I would like to follow your, market wraps and market views. How can I do that? There are two ways. One is I have my personal community, my personal app called Next with double X. Or else you can join my Telegram channel wherein I just shoot my views on the Nifty and various sectors. No entertainment. Details will be given in the description box. So without wasting any further time, it was a good week. It was a very good week. Now I'm going to look at the bar chart on the weekly time frame. It will show me 3 consecutive weekly gains. Very good. I'm going to change my Heikin Ashi daily to the bar chart, and I'll show you that at the end of last week, which was here, we were talking about, hey, listen, there were 8 positive daily closes. It has come back to 25 150, 25 250 range. It should get tired, isn't it? It did get tired a little bit on Monday, and we thought, okay, let it slow down, no problem. The trend has reversed, the state of flow is positive, the momentum is on the upside. It's a healthy consolidation, ease off. But the market has completely something different, up his sleeves. And big move came on Wednesday, Thursday, or should I say this was Monday. So Tuesday, Wednesday, and Thursday. And today, it took a little bit of a breather with a 96 point down. It's completely all right, no problem. I'm just trying to emphasize on the fact that this particular bounce back, which was just looking like a bounce back, has turned out to be one exceptional good move. And now I'm going to change my daily chart to Heikin Ashi. I'm going to change my weekly back to Heikin Ashi as well. And then I will see that from this day to yesterday, I think this will be around a count of 10 or 12, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 consecutive solid Heikin, solid positive Heikin, which means it is green, it has an upper shadow, it does not have a lower shadow. This is an exceptional move. It has taken out this fractal high easily. It has crossed over these highs pretty easily, no problem whatsoever. So things have improved much more than what both of us would have expected. So that's a good thing. Starting with the weekly chart, trend has reversed, Heikin has reversed, momentum is reversing, state of flow is still null. There's nothing much because it's a bounce back after this fall, but definitely signs of improvement. Come to the daily, it is a beautiful trend momentum sink. Yes, it is of course a little bit stretched. Now in terms of Heikin charts, I personally call these kind of patterns HAGV, Heikin Ashi golden bar, which are essentially signs of consolidation, contraction, and slowdown. Like this. They can lead to a continuation. Well, they can also lead to a reversal, right? And so, what is going to happen after today's HAGV? Is the market going to reverse next week? Or are we going to see a consolidation and a further extension of the move? Well, at this juncture, what I have to do is I have to collect evidences from the chart and try to conclude that which way do I think it's going to move. Trend momentum intact. Momentum divergences, nope. Any strong resistances? Not really. So there is not enough evidence to call for a reversal, which means that I should stick to the trend and I should expect further upsides. But on a realistic note, to be a little sensible, it will be healthy for the market if it cools off a little bit. now cools off a little bit. What is that supposed to mean? Well, generally, whenever we have a rally, a very obvious decent level is a 50%. But 50% retracement is quite a bit. Before that, I have some highs which were of some importance. One level is this, which is close to that 25, 250, 230. The other level is this, which is around 25, 150. So I can say 25, 150 to 25, 250 should act as the short-term support. And that will mean what? 20 to 30% retracement of this rally, which is completely okay. So that's the support. Let's work with that for the time being. On the upside, if you take a look at the weekly chart, the obvious level that comes out now is the all-time high, which is around 25,669 on the Nifty spot. It should not be much of a problem if the market does not retrace more than 50%. Going back to its all-time high should not be a problem. So now the market has turned bullish. It is a bit stretched. Strategically, we should not chase the sectors which are stretched. Now, talking about sectors, one good thing which I personally really liked about this recent bounce back from the market is a beautiful participation from almost all the sectors. It was not like a rally wherein 2 or 3 key sectors perform. The bank nifty, the IP, the energy, and the others lag or they are negative. It was not that kind of a move. Over here, we did see participation from almost all the sectors. And those sectors which were, not doing that good, the bank nifty, the finance, the private bank, the defense, the real estate, the energy, they have also bounced back. And those who were strong, your auto, the metals, they have held on to their gains. So this is a very, very, I don't know if you've figured that out or not. I find this as a very, very strong internal strength in this particular rally. And so I'm pretty much bullish, and I expect that the market not to correct or retrace too much. A little bit is fine, and then hopefully give us another leg on the upside. Now, if I use this tool to count the number of days since we had the recent bottom, it's around 14 bars on the daily time frame, which means 14 days. Okay. With this in mind, let me take you to my strike analytics page, which we generally use for our RRG graph. And let's go to RRG graph. Okay. Let's go to the NSE sectors. Let's pick Nifty 500 as the benchmark. Let's stick to the days. Now, this is what I wanted to do. And let's change the count from 5 to 14. Is that okay? 14 days counts on the daily time frame. The sectors, let's fit them. And now let's sort them out. And so we see that PSU Bank is the biggest gainer in the last 14-day period, followed by metals, small cap, public sector enterprise, mid-cap. FMCG and consumer durables have been marginally negative, but pretty much a decent performance. If you take a look at the mid-cap and small cap, they were around 3%, 5%, and 2 sectors were outperforming them, the PSU Bank and the metal. So overall, the last 14 days, it's not been a bad move. This week, let's try and figure out relative strength from this graph. Let's try and do that. On the higher time frame, on the leading quadrant, we have the PSU Bank looking good. We have the metal looking okay, losing a bit of momentum. Small cap and mid cap have improved and they're on the leading quadrant. And then the PSE, which is the public sector enterprise, is also looking good. Remember, every end of the week when I do this video, I take a 12 or 13 period on the weekly time frame. Today, this week, I'm particularly sticking to 14 days. That is essentially the number of days we have had the rally. And let's try and understand whether the ones which are in the leading will continue to lead, or should we focus on the improving ones. With that in mind, let's take a look at PSU Bank first, and then we'll go to the metal. CNX PSU Bank last week, we had flagged it green. Trend, momentum on the weekly time frame has improved, is improving also. Daily has given you a fantastic move. It is stretched, it is bullish. There are no evidence of bearishness or contrarian divergences. So we should keep a green flag. But just because we have a green flag does not necessarily mean you chase each and every move. I think waiting for a short-term correction makes sense. Metal also, we flagged it green last week. Now this is very, very clean. My indicator state of flow clearly is telling me it's a bullish chart. Same logic I will apply here also. The daily has had a great run. State of flow is beautifully green, but I would not want to chase. So they are bullish. The view is bullish, but the idea is not to chase breakout, but to look for corrections and then go for the pullback. Mid and small caps have performed well. They have almost closed. This is CNX small cap at the highest point of the week's range. Not bad. Pretty good move. Same logic. I don't want to repeat the same sentences. Midcap also falls in the same category. Okay. The market has turned itself 2 weeks, 2.5 weeks back where things were not turning, looking that good. It has turned around. It has stretched. And now it makes sense to wait for meaningful corrections to look for buying opportunities. So this RRG graph on the 14-day period, the PSU bank is all right. The metal, which is losing a bit of steam, is still okay. We should wait for a better buying opportunity. Public sector enterprise is moving from left to right. And we did see, I personally noticed, particularly in the last 3 to 4 trading sessions, how well the PSE stocks were performing across various sectors. PSE in the banking, defense, energy, etc. The CNX PSE, last week we did not flag it green, primarily because of the weekly weakness, which was pretty much evident. But now on the weekly chart, what has happened, we have a solid green. Daily is fantastic, no problem. I will not chase. I will give it a green flag, but I'll definitely wait for corrections to go for the next leg. Makes sense. Now let's go back to the RRG graph. And now rather than going clockwise, which I do all the time, I want to do an anti-clockwise. I would like to focus on the improving ones today. Because the improving ones is the longest list, number one. I have a market which has turned bullish. I have a market which has turned bullish and is stretched. I am in a situation where the sentiment of the market has improved so much that I would like to look for long trades on Monday, Tuesday, Wednesday. But to be prudent, to be sensible, it makes sense to wait for a little bit of a slowdown, correction, consolidation, and also look for those sectors which still may have some headroom. Which means from an RRG point of view, look at the ones which are in the improving quadrant. And so I thought, let's spend some time, the first chunk of our time, and let's take a look at the improving ones. Over here, we have the pharma. All right, not a very good looking RRG graph. We have the reality, good looking RRG graph. Financial services looks good. Energy looks very good. Private bank look good. And bank Nifty looks good. Out of these 6 names, if you have noticed, the one which is closest to the axis is energy. This point, closest to this line, which means amongst all these 6 names, energy has the best relative strength. Amongst all these, the ones which have the worst relative strength, it is there, but least is the bank Nifty. We have to keep this in mind. So, should we start with the bank Nifty? I think we should. Bank Nifty, if you remember last week, I had told you that we are not going to flag it off, but if it keeps on moving, we just have to look at it. And that's exactly what happened. Okay, weekly turns around. Okay, not a very bullish chart, neither a bearish chart. It's an okay chart. Come to the daily. A lot of things have improved. I've got an HAGB. It's kind of a make or short-term correction can come in. Bullish, wait for corrections to go for long trades. Flag, of course, green. Bank Nifty is heavily skewed by private sector banks and it's back to its previous fractal highs. Same logic, wait. Can I go short? No, there's no particular reason to go short. Flag green, but wait. PSU Bank, we've already seen it. And when we do that, we always check the CNX Finance as well. Finance turns around, not bad. Again, the same story. It might, respect these resistances. It should respect this resistance. So if we see these charts, Finance, Bank Nifty, Private Bank, or any of these which had a great run and an HAGB and close to resistance, we see some bit of a slowdown or correction, it's actually healthy. Okay. So this entire pack stays positive. Another one that was there in the improving was CNX Pharma. Pharma gave us a breakout. I don't know if you follow I try to share two sets of my market views every day. One in the morning around 10:30 and one in the evening, generally is between 7 or 8 p.m. You can find them in my app. You may find these write-ups in my Telegram channel, whichever suits you best, you can follow. And a couple of days back, I was talking about this fact. I've written that, listen, pharma is contracting. Pharma is contracting. Markets is running away. Markets going to lose out of breath. We need fresh legs. We need fresh breakout. Boom, comes Sun Pharma, breaks out, and CNX Pharma gives a move. This happened on Thursday. I remember particularly because Wednesday I was talking to our Next community members, traders, and we were focusing and we were discussing about whether pharma healthcare will give us a move or not. Now we have a move. So trend momentum is in sync. Weekly charts has improved. Bullish, no problem. We had kept it bullish last week also. Other names is over here. We have energy and reality. Energy important. We saw the OMCs giving us a good move today. Weekly, okay. It's neither very bullish, of course not bearish. Daily, of course, is a little bit stretched. I would not like to chase. Let's mark it green. Wait for corrections. Real estate. Real estate or the reality will show you a bit of a double bottomish kind of a shape. It's not a very good looking, but it's not a bad looking either. If you ask me, it gives me a sense of an Adam and Eve kind of a double bottom, where the second bottom seems to have made another double bottom. So it's, in terms of classical technical analysis patterns, it's got a lot of dope in it, a lot of stuff that one can talk about. Anyways, talk about trend on the weekly, not that great. Momentum on the weekly, also not that great. This is bounce back. I like the short-term divergences. Our indicator over here marks these concepts. Whenever there is a divergence, it marks it. It helps us to figure out that, listen, this is not the place to go short. This is an area where there's a high possibility of a bounce back, and thankfully, the bounce back has come. Bullish, yes, and we have to wait for a correction. So keep an eye on the DLF, Lodha, Godrej Prop, stocks like those, right? And if you find that the trend momentum has reversed and they are giving you a short-term correction pullback, those are much better opportunities. So all the improving ones are definitely improving, but we would better not chase them, right? All of them seems to be a little stretched from a short-term point of view. Now let's come to the lagging, and that's FMCG. Yeah, it is lagging. Let's talk about FMCG and consumer durables together. If you remember, auto broke out and consumer durables broke out. So did FMCG. But there was one aspect about FMCG which was not there in consumer durables. When it broke out, you will see that clearly on the weekly. Excuse me. You see that clearly on the weekly time frames. It broke out, but it could not sustain. It came down. It tried, but it slipped. The pack is mixed. ITC, Hindustan Unilever, all of a sudden Tata Consumer Durables gives a move, and it's not across the board showing strength. But if you ask me, the weekly chart, the markers, the evidence that I see on my weekly chart, which is right in front here, is telling me clearly next week, make or break. This guy should give us a breakout. Trend is in your favor on the long side. Momentum is in the favor. State of flow is in the favor. And ideally, it should be a positive breakout. Ideally. Kuch bhi ho sakta. Anything can happen. So FMCG can be one sector which is lagging because it's not performed that well over the last 2 weeks after this move. And so, look out for a move. Consumer durables, on the other hand, after it broke out, it held relatively better. Not so much volatility like FMC. Weekly chart, still all right. Daily chart, cooling off. And essentially, you should be looking at Wednesday's high. The problem over here is, I think, Titan. Dixon has been holding exceptionally well. Havells a little bit here and there. And then the others are struggling to give a bounce back like Bata and Voltas and others. But I think it is worthwhile to keep an eye on last week's high for both consumer durables as well as the CNX FMCG. And so you should go down to the index constituents and also mark the relative highs of important stocks. Okay? So consumer durables and FMCG. Next in the weakening quadrant are auto, IT and consumer durables. Consumer durables we just spoke about. We will be looking out for that move. What about auto and what about IT? Take a look at auto's positioning. Try and understand where is the axis. So this guy has huge relative strength, but it's losing the momentum of relative strength, which is completely understandable, which is completely okay. You've had an exceptional breakout. Every pullback has led to a new high. And now it is tired. It is slowing down. It should slow down. I can see a bit of a divergence playing out here, followed by an HAGB. So definitely not going to chase auto on the long side. This pack should give us a correction like this. Consolidation or a little bit of dip correction is highly likely. So auto, I'm expecting some bit of a slowdown, consolidation, correction. Which leaves me with IT. Now, IT last week we did not flag it off because of the outside bar, the trend being negative, the state of flow, everything was not in your favor. This week, the Heikin has turned around, state of flow is neutral. Daily chart has turned around, HAGBs. This is a bullish chart on the daily time frame. This is an improving chart on the weekly time frame. So the flag goes green. Which leaves me with the 4 other sectors which are not there in Strike Analytics. Capital market, we had marked it red, I remember last week. But it's held well this week. Not bad. Go to green. Defense has turned around exceptionally well. Go to green, but don't chase. Wait for dips. Digital has a lot of IT names on the verge of a breakout. Again, positive. And India tourism. This is one sector which I really doubt what it is doing, especially Indian hotels. If you've tracked the stock, has been particularly choppy. Monthly, okay, there is a slant divergence. Weekly, okay, there are signs of slowdown. Price is not coming down. That's the point. So let's keep it green. Let's keep it the flag green. Let's look for positive trades. But tourism does not matter so much. So does what matters is the Bank Nifty. What matters is the IT. What I sense is we had a good move. Law of average applies to almost everything under the sun. And I think that this momentum is very likely to slow down. It might be a short-term 1 or 2 day slowdown, or maybe throughout the week, that I don't know. What I know as a trader, how we should strategize and position ourselves is keep your view positive. Do not look for shorts. I don't have any markers which will tell me to go short. If someone is going short, he is going short because the market has gone up too much. So let's short. So strategically, stay biased, but don't expect too many trades because the market's moved quite a bit. Wait a little bit. Fresh breakouts, if it has to come, the only 2 sectors which can offer that breakout is FMCG and consumer durables. Fresh breakout. Because last 2 weeks, they have not been doing much. So if we expect auto to slow down, banks to slow down, IT to slow down, and if the Nifty does not come down, then who's going to counterbalance? Consumer durables does not have a lot of weightage. FMCG a little bit. But ठीक है, pharma और FMCG भी अगर more or less hold कर लेता है, if it holds, that's enough for the Nifty. Right? So I feel that for the last 7 to 9 days, we had a one-way rally where most of the sectors were green. Now going forward next week, I think it will be divided. Maybe 50% of the sector is green, red, within the sector, some stock-specific behavior. So I'm not going to chase long trades left, right, and center, but I'll be looking out for long trades. I will not be looking out for short. Right? So that's it from my side. 9:43. I started at almost 9:18, 9:20. So around 20-23 minutes. I think not bad. Do let me know. How are you using these videos or these weekly analysis? If they're useful, I'll be very happy to know that. Right? Till then, enjoy yourself the weekend. Prepare hard for next week's trade. Trade well, everyone. Take care of yourselves. Good night.